After a steady start to the year, it's been a really volatile last few weeks in global equity markets. It might help if I explain a little bit about what's happening. So Ben Bernanke in the US has said that he will carry on with QE up until the point at which US growth looks a bit more stable. And recently, it's been looking a bit more stable. So there's been sort of thoughts of him pulling back on QE, and the markets have been nervous. S&P, the ratings agency, who downgraded the US in August 2011, have come out with their most positive statement to date on the US economy, saying that they think the US economy is now stable, no longer negative. This brings it into line with the other ratings agencies. We too think the US is relatively stable, certainly in a global context, and companies have done well this year. But companies and stock market investors don't like the uncertainty, and so this has led to increased volatility recently. Now, Shinzo Abe in Japan, he's come in and he's saying that he will double the money supply in Japan in an effort to stop this, the 20 years they've had of sort of stagnation, economic stagnation. So this has been really positive for the Japanese stock market. But again, we've seen increased volatility in the last few weeks over the sustainability of this. Europe continues to be in a mess. The unemployment situation is untenable, and for the youth of certainly countries like Spain and Italy and Portugal, it's a really torrid situation. 50% of the youth in Spain is unemployed, and this is not a great scenario for both Spain and Europe and the world in general. And certainly France is now falling towards greater problems. And the UK, well, we've just got Osborne meddling a little bit now into Royal Bank of Scotland, and maybe state intervention will become a problem in the UK. So all in all, the stock market volatility has increased, and we are remaining strong on our protection positions, which benefit the portfolios when the markets fall. And we continue to like the US dollar, which we feel with the increased uncertainty will remain the go-to currency.